Hello everyone! I know what you are thinking. Who is this guy? Where is Mark? And what is happening? Well, due to some unforeseen circumstances, my friend has moved on to do other greater things. While I'll be taking over this channel and providing you with all the freshest and most up-to-date crypto news possible. A lot has happened since the last time this channel has seen a video. We have a lot of catching up to do, and so without further ado, let's get right to it. As you all know by this point, April and May have been tough on cryptocurrencies. You can see here, the price chart looks sort of like steps, with each month being a step representing a fall of about $10,000 per coin. June was probably the worst month in years. We've seen the price go below $20,000, which obviously had everyone panicked and running to cash out their Bitcoin ASAP. Or at least those who really felt the fear associated with going below this psychologically important barrier. We all like round numbers, so to speak. Well, thankfully, recently things haven't been so bad. We've seen a slow and steady rise for about a month now, and that is going against the grain of interest hikes and inflation. Not so bad. At the time of recording, Bitcoin is floating somewhere around the $23,000 mark, which may be low if you take the entire year into account, but for many investors that price is something that lets them sleep better at night. So, where's this all coming from? I'm sure that by now you all know that Bitcoin and other cryptocurrencies are not separated from the rest of the world's markets by some magical barrier. Shortly speaking, the economy is not in a great place. The pandemic has left a brutal mark on our daily lives in the form of really high inflation. The details behind this are obviously far more complicated, but suffice it to say, inflation is not easily dealt with, and especially this kind of inflation we're dealing with right now. Nevertheless, the Federal Reserve went for the old-school interest rate hike. As you can see here, we've had another consecutive rise on Wednesday, which brought the general benchmark to about 2.5%. So obviously, elephant in the room, the reason why crypto is bleeding is fear. Fear of a recession, to be precise. When investors fear that the economy might be in bad shape soon, they tend to divest from risky assets, such as virtual currencies, and try to save money. When the Fed raises interest rates, the economy slows down, and that might signal a recession. But it does not necessarily mean that the recession will occur. Powell himself says that it is unlikely, as we have more and more jobs coming in the US, and wage growth and job gains are not correlated with recession. So, generally, experts are divided when it comes to the risk of a recession occurring. Obviously, I am talking mainly about the United States. But we all know that if a recession occurs in the US, it is almost sure to impact the entire world. Anyways, here's why it's hard to say whether a recession will really occur. Basically, there are a number of indicators for a recession, and the US fits some of those while not others. For example, gross domestic product fell in the first quarter of 2022, but the job market, spending and income growth seemed to be in decent shape. But the situation is very dynamic. You can see here in this article from the New York Times that a number of different indicators, such as the housing market, are starting to look worse and worse. Generally speaking, while we don't know whether a recession will hit for sure, there is a consensus from economists regarding the fact that the risks of a recession occurring are rising, and for investors, risk and real life are almost the same. Actually, even worse, a potential future risk may actually be a more significant factor impacting the way an investor thinks, because they, or we all, bank on the future changing in a way that we have foreseen. And like I said, as investors are more and more afraid, they invest less and less in crypto, so the price of cryptocurrency falls. It's all good, that's just how the markets behave. Obviously, crypto is a macro asset that is unique in many ways, but who really thought it was going to be completely immune to the economy? No asset works that way, and apart from maybe some natural resources which follow their own price paths, which may be affected by a smaller number of factors. Speaking of fear, let's look at the Crypto Fear and Greed Index. A classic for any crypto enthusiast and a good example of sentimental analysis. Now, it's important to know that the usefulness of this indicator is debatable and it should only be used in conjunction with other information. However, you can see here that it's not as bad as it was a while ago. It's actually pretty decent. I mean, sure, it's still fear, but this is crypto we're talking about. It's extremely volatile and most investors are afraid all the time. If you compare this number to the numbers we've seen throughout the years, it seems pretty close to the middle. It is said that people don't like to be in the middle, and as soon as the index creeps closer to 50, it will violently swing in the direction of either fear or greed. Now, it's been some time since we've seen greed on the index, and I wouldn't bet it's going to happen anytime soon. We're probably going to see more fear. However, the fact that we're seeing values up to 30 and 40 is still a decent sign. This might be the light at the end of the tunnel, a suggestion that there is a way out of this post-pandemic crash after all. I wouldn't bank on it happening anytime soon though. Let's be real. We've had one of the longest bull markets in history and we've just hit bear market. This is going to take some time, so we're just going to have to bear it. Okay, so we've established that we're in a bear market. We've established that it could be worse. We've also established that we don't really know how bad it's going to get quite yet. Crypto has bled, but seems to be stabilizing. What now? Well, there are a couple of things you can do. First of all, you should stay calm. Now, obviously, this is not investment advice, but nothing good comes from combining your emotions and with money. Always do your own research and make your own choices. But if you're already watching this video, why not count me as your research and see if I have anything interesting to say? Well, I don't really know if I do. There is no recipe for making the most out of this current situation. You'll just have to stick to your best practices as always and look for good situations where you see them. One thing I can tell you is that all those people shouting "buy the dip" at the top of their lungs are not entirely wrong. But they are not entirely right either. It's really hard to foresee how the market is going to behave. The crypto market in particular hasn't had a long enough history to gather enough data to really know what is going to happen. And on top of that, our current economic situation is also pretty weird and unpredictable. We're hitting really high inflation that's probably caused by the pandemic and bad infrastructure, and various economic indicators are contradictory when it comes to painting a clear picture of whether or not a recession will occur. So to end today's video, I will leave you with an article that I like. Not because of what it says. I mean, not to say that what it says is wrong, but it's not my main reason. My main reason is that the article is a list of different ways to stay sane while trading crypto, and I believe this really should be your biggest focus. Stay sane, stay grounded, don't panic. Remember, those kinds of ups and downs are a part of the economy. They've been here always, or at least since we've had markets, so a long time. So that is about it for today's video. Thanks for watching. Remember to hit that like button and subscribe if you want to see more of my content. My aim is to bring you crypto and economic related news in a light, easy to digest format that is directed at everyone and not just the insiders who stare at charts all day. Anyways, thanks again for watching and see you next time.